If I am starting forex trading for the first time, or if I have made mistakes and I've lost so much in the past, and after some break, like 1 month, 2 months, or 6 months break, and I decided to start trading forex again, this is what I am going to do. I want you guys to pay clear attention. If you are in the journey of starting afresh, starting all over again, maybe this is your first time you are starting forex trading, or you are just starting afresh after losing so much, you want to start again from scratch, this is the best guide that you are expected to follow so that you can bounce back and become successful in this industry. So if I'm starting forex trading, the first thing I'm going to do is I'm going to set aside some amount of money that I will use to invest in the business. Now, I will not advise you to directly invest that money with a broker, because forex trading requires money. If you want to make substantial amount of money in the industry, you need enough capital, because the higher your capital, the higher profit you are expected to make. So that is why using your own capital will not be enough, because for a starter you don't have enough capital. Let's say, for instance, you have $100 in your trading account. There is nothing you can achieve with that $100, because 1% of that $100 is just $1. So what are you going to achieve with just $1? So that is why you need an avenue where you can get enough capital. So if you are starting from scratch, the first thing I would do is to look for a reputable prop firm. Instead of depositing my money directly to a broker, I rather trade through a prop firm, in the sense that I'm going to buy their account, and when I pass their challenge, I will trade the account, and whatever profit that comes out, I will take 70 or 80%, while the prop firm takes 20% or 30%. So the first thing I will do is to go and research for reputable prop firm. By so doing, you can simply go to Google search and type best prop firm in 2024. Best prop firm in 2024, and then you send. So once you send it, Google is going to bring out different prop firm that you can choose from. So here we have 7 best prop firm you can trade. Let's open this one. Okay, now you can see here we have several prop firm. We have the best feature prop firm, we have Apex Trader Funding, we have End to Trade, we have FS5. We have the 5-star, we have Top 1 Trader, My Funded Future, and so on and so forth. We also have FTMO. So there are so many prop firm that you can choose. So all you need to do is to Google it and search for a reputable prop firm that you truly want to invest with, because the reason is you can use small money to buy the account. So let's assume that you decided to go with prop firm like FTMO. Fine. So what you will do is you look for the smaller account, the smallest account. Like FTMO, I think their smallest account is 10K account, and right now the amount is not that expensive, because before they normally purchased the 10K account for $170 something dollars, but I think right now they are under bonus, like they are doing promo for 10k account, so you can purchase the 10k account for just $100, right? So with that $100 you can use it to purchase a 10k account, right? And then what you're expected to do is to pass the challenge, and after passing the challenge you can now trade the account. So once you are able to get a prop firm, buy a prop firm account like 10k account with just $100, the next thing you are expected to do is to go through the challenge. They have the challenge and the verification. For the challenge, you're expected to make a profit of $1,000. You are not expected to lose $1,000, and you are not expected to lose $500 in a day. So that is for the challenge. Why for verification, you are expected to make a profit of $500, and you're not expected to lose $500 in a day, and you're not expected to lose $1,000 in general. So these are the rules. You have to abide by the rules and make sure that you follow the rules diligently. So once you have gotten a prop firm and you have bought a prop firm account like 10k, the next thing you're going to do is to download their app. They might be using MT5 or MT4. You download the app on your phone, maybe MT5, depending on your registration, the one that you decided to use. You download the app on your phone. Let's assume that the app you wanted to use is the MT5, so you download it on your phone to monitor the chart. Then if you want to do your technical analysis, you can go to TradingView and do your technical analysis. So now that you are able to get a 10k profit account, and you know that in that 10k you're just expected to trade 1k from it. So what you are expected to do is to look for a lot size that equals to $10. That is to say, you are expected to risk $10 per trade. So $10 is 1% of $1,000. So if you lose $10 100 times, it means you have lost $1,000. So that means you are expected to risk $10. Now you are going to trade based on 1 to 3 risk reward ratio, in the sense that you are risking $10 to make what? $30. So now that you have gotten the prop firm, and now the next thing is to look for the pair that you are expected to trade. There are so many pairs that you can trade, right? We have the Euro USD, GBP USD, we have gold, and so on and so forth. But as a newbie or someone who doesn't have enough experience or enough capital, I wouldn't advise you to trade gold unless you have enough capital or you have the experience, because gold is highly volatile. But if you still insist you want to trade gold, fine, because gold has potential of making profit. The reason is because gold moves faster. So in just a matter of time, you can make enough pips trading gold. So if you feel you are okay with gold, then you can trade gold. So the next thing is for you to pick the pair that you want to trade with. In this scenario, let's assume you want to trade with gold, SAU USD. So now you have picked the pair that you want to trade with. Then the next thing is to look for the time frame based on your trading style. Let's assume you are a day trader. Then you have to search for 1 hour time frame. That should be the time frame that you are expected to trade with, right? So let me open the chart and show you an example of what I'm talking about. Now let's assume that you want to trade gold. In this scenario, you have already bought the prop firm account with $100. You have bought the 10k prop firm account with $100. You have done all the settings. You have downloaded the MT5 and you have already installed the MT5. So have it at the back of your mind that in FTMO, gold market is the same with TradingView. Like if you open gold on any market, on any broker on TradingView, it has the same quote with the one on FTMO based on experience. So what you have to do is to look for the time frame that you want to trade with. So in this scenario, we are trading based on the 1 hour time frame. You can see the 1 hour time frame, and now you are trading off gold, SAU USD. So you are trading gold 1 hour time frame. So now you have been able to pick the time frame you are going to trade with, and the the pair that you are trading. So as a beginner, I will advise you to stick to just one pair so that you don't be confused. The reason is for you to pay clear attention to that pair, understand that pair, so that you will know when to trade and when not to. Because as a newbie, if you trade so many pairs, you are going to be confused. You become confused. So that is why whatever pair you are choosing, stick to that pair. Don't trade so many pairs so that you don't become confused. So that is why I keep advising you guys to focus on one pair. So if you are trading gold, focus on gold. If you are trading Euro USD, focus on Euro USD. If you are trading GBP USD, focus on GBP USD. Just focus on one pair. Very, very important. So now you have gotten the prop firm and you have gotten the account that you want to trade, which is the 10K account. You have gotten the registration, login and everything, which you can use to log into your account. So what you have to do is to come to trading view and then do your technical analysis. Now for 10K account, if you are trading gold and you're using 10K account, I would advise you to trade with 0.05 lot size. 0.05 lot size, and your stop loss should be 20 pips. If you check, you see that 0.05 lot size with 20 pips stop loss amount to $10. That is to say, if you use 0.05 lot size and your stop loss is 20 pips, that means each time the price goes against you and hit your stop loss, you are going to lose $10. But let your take profit be 60 pips. If your stop loss is 20 pips, let your take profit be 60 pips. That is to say, if you lose $10, you are expected to make $30. So that is what we call 1-to-3 risk reward ratio. So you are risking $10 to make $30. So that is how it works. So now you have been able to choose the pair and the time frame, and you have been able to get in the lot size you are expected to trade with. Like I said, for a 10K account, 0.05 lot size with 20 pips stop loss, and your take profit should be 60 pips. That is to say, you are targeting to make $30 and you are targeting to lose $10. That is it. So now once you have done these basics, now is the main thing, which is your trading plan and your strategy. So we have done the money management aspect, which means you are expected to use only 0.05 lot size with 20 pips stop loss and 60 pips take profit, and make sure that you stick to this rule and don't change it. Don't ever change it, because you are trading with just 10K capital. Know that you are trading with prop firm. So when they say 10K, it means 1,000, because they have the rules. So in that 10K, you are expected to trade just 10% of that 10K, and you know that 10% of 10K is $1,000. So if you are buying a 10K profit account, just know you are trading $1,000. And if you are buying a 100K profit account, just know you are trading a 10K account. So that is how it works. So now we have gotten our money management in place and our risk management in place. So the next thing is our trading strategy. There are so many strategy, and I've taught you guys so many strategy on this video. But the best strategy that I think you need the most is price action, because this is the strategy that every trader need to master. Even if you love indicator, you need to master price action, because if you use price action alongside with indicator, it will give you a high trading probability. So that is why I still insist that you master price action. So that is why I take out my time to teach you guys how to trade price action, because that is the foundation of all technical analysis, price action. So next thing is for you to master price action. Master price action. Master price action. Once you master price action, you will thank yourself, because you have gotten a weapon to defeat the market. So price action is what you need. So now, how do we trade with price action? Pay clear attention. Pay clear attention. To trade with price action, there are just 5 things you need to take into consideration. 5 things you need to take into consideration. Number 1, you have opened the chart. So this is the chart. You have opened the chart. So the next thing as a price action trader you are expected to do is to zoom out your chart. So we zoom out the chart. So now you can see that we have already zoomed out the chart. So this is gold, 1 hour time frame, and we have zoomed out the chart. You can see clearly that we have zoomed out the chart very well. We have zoomed out the chart. Okay, let me remove this so that you understand what I'm talking about. Okay, so we have zoomed out the chart, right? So now that we have zoomed out the chart, what is the market telling you? The market is telling you that the price is in an uptrend. So that is what we call the market structure. The market structure tells us that the market is clearly in an uptrend, right? So you can see that the market is going up. So if you want to further confirm this, you can use your trend line and then connect the low. So with this, you can clearly see that the trend line is pointing up. So this tells you that the market is clearly in an uptrend, right? So this is what we call the market structure. The market is clearly in an uptrend because the trend line is pointing up. So it tells you that the market is clearly in an uptrend. So now the first step as a price action trader is what? Market structure. So you have confirmed that the market structure is uptrend. Now the next thing you have to take into consideration is the area of value. So after confirming the market structure, we now look at the area of value. So the area of value is what we call support and resistance. So that is where price normally receive support before the uptrend continues. You know that when the market is in an uptrend, the market normally receives support before the uptrend continues. So that support is where you are expected to take your trade. In other words, we call it an area of value. So now the next thing you have to do is to look for available support level. For the fact that the market is in an uptrend, you are only looking to buy because the market direction is going up. So you don't need to sell because the market is going up. You don't trade against the trend. You have to always trade in the direction of the trend. So now that you can confirm that the market is going up, you only look to buy. So now, how do you identify an area of value? So first, we have used the trend line to identify an area of value. So with the trend line, you can clearly see that the market is receiving support from the trend line. So this is our first tool for confirming an area of value using a trend line. Our first tool to confirm an area of value. So now if you look clearly, you see that the market is receiving support from the trend line. So the market goes up and receives support from the trend line, goes up, receives support from the trend line, goes up again, comes back here and receives support from the trend line and goes up again. So you extend the trend line to the future. So if the market eventually comes down here again, if the market comes down here again, it's going to bounce off from it and continue going up. So now you can clearly see that the trend line here is acting as what? As a dynamic support level. So aside from the trend line, you also have an area of value which is a horizontal support level. So this is it. You can clearly see that it rhymes with the trend line. So this is it. It rhymes with the trend line. Are you seeing it now? So this is another area of value. It rhymes with the trend line. So if the market eventually comes down, it will tend to receive support here. So you can see that this was a previous resistance level, right? So you see that the market came here, got rejected, came again, got rejected, come again, got rejected, come again, got rejected, come again, got rejected before it finally broke above it. So if the market eventually comes back here, definitely it's going to be rejected and then continue heading up. So now, why you need another area of value is, as a day trader, you are not a swing trader or a position trader. You don't have the patience to keep waiting. You don't know when the market will come back to test this trend line because you are a day trader, so you don't have that patience to wait. So what do you need to support this trend line as an area of value? You need a moving average. So you simply go to indicator, go to indicator and search for moving average exponential. This is it. You click on it. So for the fact I have it, I'll just open it. So this is it. You open the moving average. So now you can clearly see that the market is in an uptrend, a strong uptrend. So for the fact that the market is in a strong uptrend, we either use the 30 exponential moving average or the 20 exponential moving average, because the market is clearly in an uptrend. So in this scenario, we are using the 30 EMA. So this is it, the 30 EMA. So if you want to do the setting, you can simply go to the setting here, click on it. Once it opens, then this is it. You can do the setting here. You can go to the input. See, this is the 30 EMA. Change it. This is the 30. This is the EMA exponential moving average. Then you change the color, increase it, and then you click OK for it to save. So you now have the moving average. So for the fact that the price is still far away from the trend line, you can use the moving average as a support level. In this scenario, the moving average will be acting as a dynamic support level. So that is why you can see that whenever the price comes to the moving average, it gets rejected. If the price comes to the moving average, it gets rejected. If the price comes close to the moving average, it gets rejected. And if the price comes again to the moving average, it gets rejected. Price comes again to the moving average, it gets rejected. Comes again, it gets rejected. And you can see that the price is also at the moving average now. So you will be trading using the moving average, because in this scenario the price is in a strong uptrend. So the price is still far away from the trend line. If you are waiting to take your trade from the trend line, you will wait and wait and wait. So the people that can wait are swing traders and position traders, because these are traders that hold trade for days and weeks. But as a day trader that hold trade within a day, you must work with the moving average, because that is the level that the market is respecting. So you trade based on the moving average. So now the moving average will act as a what? An area of value, dynamic support level. So now you have gotten an area of value. The next thing is an entry trigger. So an entry trigger can be in form of a rejection candlestick pattern. Like this, an example of what I'm talking about. This is a rejection candlestick pattern. You can see that the price breaks a little bit below the moving average and then ended up in a wick. So if the price breaks below the moving average, only to come up back with a rejection wick forming a hammer, that tells you that the market is going up. So that hammer is what we call a candlestick rejection pattern. So this is a bullish rejection pattern, and it forms our entry trigger. Another one is the bullish engulfing pattern, where the green engulfs above the red. Example, you can see that the price came down to test the trend line, and then the next candle that formed was green and it engulfs above this red. So this is what we call a bullish engulfing pattern. So you can wait for this green to close and place your buy trade, then your stop loss will be below the trend line. The same thing applicable to the hammer. If the price comes below the moving average, get rejected, you wait for the candlestick that formed the hammer to close. Once it closes, you place your buy trade, then your stop loss will be below the moving average, and then your take profit should be 1 to 3 risk reward ratio. You just calculate like 60 pips as your take profit, or you look for previous resistance level, because that is where price is likely to reverse from. So now you have gotten your entry trigger, which is candlestick reversal pattern. For the fact that this is in an uptrend, we look for the bullish reversal pattern like hammer or bullish engulfing pattern. So I've given you the example of bullish engulfing pattern, which is this, an example of hammer. Hammer is a candlestick with rejection, long wick. We call it hammer. So once you see this entry trigger, this is what triggers you to enter a trade. So now, what will be your exit when you are wrong? Your exit when you are wrong is your stop loss. And like I said, your stop loss must be 20 pips below the entry. So if you enter here, your stop loss should be somewhere here. And if you enter here, the stop loss should be somewhere here. So just do the calculation. 20 pips should be your stop loss. And what will be your exit when you are right? That is your take profit. Your take profit must be 60 pips. That is 1 to 3. So you are risking 20 pips to make 60 pips. So that means you are risking $10 to make what? $30. So this is what you truly need to become successful in forex trading. There is no other magic involved. There is absolutely no other magic involved. This is what we call pure price action with the use of candlestick pattern, trend line, moving average, and your eyesight, alongside with a good risk management and money management. You have been able to build yourself a strong trading strategy. So once you have this strategy in place, you keep on implementing it consistently, and once you're able to pass the challenge and the verification, FTMO is going to hand you over the account, and you are going to trade based on the account that you passed. So if you pass a 10K account, you're going to trade the account, and if you make profit from it, you can still use it to buy a bigger account. And once you're able to pass the 10K account, that is to say you're able to make a profit of $1,000, and you were not able to lose $500 in a day, and you're not able to lose the 1K. Instead, you made a profit of $1,000. FTMO is going to take you to the next level, which is the verification. And once you go through the verification and you're able to make a profit of $500, and you're not able to lose $500 in a day, and you're not able to lose $1,000 in general, and you're able to make $500 profit, that makes you qualified for their account. So that means you can be able to trade the account that you just passed. So they're going to give you the login for the 10K account, which means you are not trading 1K. So that means you're able to use $100 to purchase a 1K account. So instead of trading $100 with a broker, you are not trading with 1K, that is $1,000 with FTMO, right? So now, depending on your skills, your risk management, your money management, your trading style, your trading strategy, your trading plan, and once you have a good trading psychology and a good discipline, you'll be able to make profit. And once you're able to make enough profit, you can use the profit to purchase a higher account. So now you are trading with $1,000. That is to say, you are trading off 10K. Like I said, if you are trading with 10K, it means you are trading 1K, right? So now you are trading with 10K account. If you make enough profit, like you make up to $1,000, you can use the $1,000 to purchase 200K account. Or if you make a profit of $500 or $600, you can use the $600 or $500 to purchase 100K account. Because with 100K account, you can trade with 10K, but with 200K account, you can trade with 20K. So this is how you are able to make money faster. Because if you say you want to trade off from a broker, I don't know how many years it will take you for you to become a millionaire. Because if you have only $100 in your account and you say you want to trade off from a broker, I don't know how many years it will take you to become a millionaire Forex trader. But with PropFM, you can become a millionaire faster once you have the right skills. What you need to do is, once you are able to purchase the 100K, the 1,000, once you are able to purchase the 10K, that is the 10,000 account with $100, and you're able to pass it and they give it to you to trade. Once you make enough profit, you can use the profit you made to buy a bigger account, like 100K account. 100K account is about $500 or $600. So you can use the $500 or $600 to buy 100K. That is $100,000 account. And you know that $100,000 is 10K. That means you are only expected to trade 10K from that account. You see it? So once you make enough profit from the 100K, you can use the profit to buy 200K. Are you seeing it now? So now, if you're able to buy the 200K, you have to pass through the challenge and verification. And once you're able to pass the 200K account, FTMO is going to give you a login for that 200K, and you're going to be trading 200K. I know that with 200K, it means you are trading 20K. That is 20,000, right? So now what you can do is to contact their support, that is FTMO support. Tell them that you want to link your account together to become a standard account. So what they will do is they will bring the 10K account, bring the 100K account, bring the 200K account, and merge it together. It will now become $310,000 account. So with this, you can be trading with $310,000 account with FTMO. So now you can see that with just $100, you can now have access to $310,000. So now you will be trading with a $310,000 as long as you are following your risk management, your money management, and your trading plan, and you're making profit. As long as you're making profit, that is it. The company will be happy with you. So what they will do is, once they see you are making profit, they will scale your account. They'll increase it, right? So they increase it by 50% or 70%. So that means after 4 months and you make profit consistently within 4 months, they will add another money into that your 310k account. So let's say they may just add like $70,000 into the account after 4 months. Consistently, every 4 months, they will be adding the money into your account until you have up to 2 million. I think their maximum funding is 2 million. And once they start increasing your account, then they will now increase your pay rate. Instead of you receiving 80% from your profit, you'll be receiving 90%. Why they take 10%. So with this, you can see that in just a matter of time, you become a millionaire. Once you have the right trading skills, the right trading psychology, and the money management and the risk management, in just a matter of time, you become a millionaire. So once you continue implementing your trading plan, which is price action, using all the steps that I've stipulated in this video, it's just a matter of time, and you will be trading off with 1 million account. In fact, you have a 1 million account, because once you consistently make profits, they will be increasing your capital until your capital is up to 2 million. I think that is the highest amount that they can fund per trader. And with that 2 million, what else do you want? That is financial independence, because with 2 million, it means you are trading off 200k. I know 200k is a whole lot of money. So if you are trading with 200k, because without 2 million, it means you are trading with 200k, because 10% of 2 million is $200,000. So imagine you are trading with $200,000. There is 80% chance that you can be able to make profit of $100,000 in a month, because you are trading with $200,000. So this is how forex traders become successful faster. You see a forex trader start forex trading, 5 years later, the person is driving Lamborghini, buying latest houses. This is the approach. This is the steps that they followed. Another step that you can follow is by looking for investors, but I think that one is very risky, because newbie traders, they love to blow accounts. If you blow account of an investor, you go to prison. But if you blow account of a prop firm, you only lose the money you used to purchase the account. That is it. But if you blow an account of an investor, someone that gives you money to trade for him, and you end up blowing that account, you have to vomit that money, or you go to prison. So you see the difference. This is the approach you need to follow for you to become a millionaire forex trader. There is no shortcut. So ladies and gentlemen, that is all I have for you in this video. I hope you love this video. If you do, give us a thumbs up. Don't forget to subscribe to my channel for more educative content like this, and also don't forget to turn on the notification icon to be the first to be notified whenever I publish new content. I will see you again in my next update. Enjoy the rest of your day. Bye.